this opportunity to change what you don't like. Where's the fulcrum from which you swing? Move it higher, aspire to find a better shape when you escape to help you along.
Hey, what's happening, internet? My name is Andrew, better known as Drewicious, sometimes known as Drewicious. I'm not sure which is which at this point. It has been a minute since I made a video. Sorry I was gone, had some family stuff going on, and I felt like making a video. I thought a little bit about what we do tonight, like conceptually, and more and more traders that I've been hanging out with been interested in futures. I think that's kind of like a natural progression for a lot of traders, and I don't know, myself included. So I thought I'd talk about them a little bit. I'm not going to add much value for anybody that knows all about them, but if you're curious about them, if you want to know more about them, I'm happy to share my meager learnings with you, and you can decide if you're interested or not. So yeah, that's kind of how I do the show, right? So let's flip this over. Oh man, we need to turn this one off and turn that one on. So futures, what are they? What are they good for? Why would you play them? Those are kind of the big questions. I didn't touch them for a long time as a trader, and I've found that I'm very interested in them. And I'm not going to make a case, but I'm going to put out the pros and cons for how they compare to options and equities, so that if you have been thinking about them, that you might have a little bit more orientation. That's my goal. If you are an experienced future trader, I got nothing for you. But if you're like an options trader or an equity trader and you're not sure why people care about futures, maybe I got some ideas for you. So let's see what happens. All right. So that's our content for tonight. But before we get to it, look, y'all, I'm on YouTube. I do these for free, and I don't know if anybody watches. I'm going to have a little bit of an idea. But if these help you out, click the like button. Helps me out a little bit, keeps me going, puts more content out there. So let's talk a little bit about the difference between equities, options, and futures. I'm going to talk a little bit about my experience, about my progression through. I think that a lot of traders kind of go through a similar progression, but I started with equities when I first got to trading. So, essentially get in, find a stock, buy that stock, wait for it to go up or down, and then get out of that stock. So that's a pretty common way to go with it, right? Just essentially like, look, if it goes up $1, you get $1, or, times however many contracts you have. And if it goes down $1, it goes down $1 by ever how many contracts you have. It's a one-to-one relationship. Now with options, that's a little bit different, right? It's a leveraged class of asset. So in options, if you are familiar with them, if you buy an option in SPY and SPY goes up by $1, your options may go up by, SPY's at, let's just say, 400. If it goes up by $1, you've gone up by, 2.5%. It's very small. Now in options, if you go up by $1, you might be up 20%, right? So it's leverage, right? That's what that means, is that, a move of $1 in the equity, the underlying, does not just result in an extra dollar in your options contract, right? That is a massive change. A 1% change or a 2% change in the ticker overall represents a relatively massive movement in the option because of the leverage. Now, futures are also leveraged. So when you jump into a futures contract, a move of a point, or what looks like $1, may be worth $10, might be worth $50, might be worth $25. It depends on the contract, depends on the actual ticker that you're in. But each one of the futures contracts has a fixed ratio between a point or a handle or a tick and dollars. So there's a little bit of a blend there between I see the thing move a little bit and getting more than just the $1 move. So that leverage is present in options and futures. Now, the difference between options and futures is that we don't always know what the leverage is going to be with options. Options changes depending on the Greeks. Futures do not. They are fixed. So you know that in an ES contract, you are getting $100 for every 2 handles or 2 points, not 2 clicks, 2 points on an ES futures contract. So the leverage is an important thing to bear in mind, right? It is one of the things I'm attracted to on options is the leverage, the fact that a small move in the underlying means a big move in the contract. And we see that same thing in futures. All right. So what about time? And by time is like a big philosophical context, right? But like in equities, we don't care how long we hold on to it, right? I mean, if you hold on to it for too long, that could be bad if it's going down. It could be great if you're holding it's going up. But we're not concerned about the time component, right? Like I don't have to make a decision between now and next week in an equity. Like if it's going up, I'm going to sit on it. If it's going down and I'm long, I'm going to decide whether I want to sit on it. But I don't care that Friday, next Friday is coming, or Friday after that, or next month. You can just hold on to an equity as long as you want. The time changes nothing. But in options, that is very different. Theta changes everything. When you get into options, you have contracts, you have expiration dates, and that theta absolutely impacts, and the closer you are to your expiration date, exponentially impacts your relationship to your contract and your premium. So the closer you get to your expiration in options, and if you're playing like 0 DTEs, which is very common right now, they're making it super easy to play 0 DTEs. That theta can cause you a big problem. So like if I'm playing a 0 DTE, I want to be in for minutes, right? Nothing more than that. Everything more than that, the theta is going to eat your premium. So if it's holding steady or it's going the wrong direction, you're hoping for a change in things, that's a problem. Now in futures, you don't have that concern. In futures, time, just like in equities, we don't care, right? You get the thing, there is a fixed ratio of what's going to happen. Certain number ticks up, certain number ticks down. You know exactly what's going to happen in your premium. And we don't actually care whether it expires today or tomorrow or next month. You've got a contract that will be good as long as you need it to be good. All right, what about availability? By that, what I mean is, when can you trade it? With equities, now this varies from platform to platform, but basically regular time hours, regular trading hours, always available. Extended trading hours varies from the broker that you use. Webull opens up a little bit later than Thinkorswim. Those are the two that I'm most familiar with, right? So I can talk about those. Equities open up at different times based on the broker that you're using. Options are really fixed. They're open from regular, the start of the market open to the end of market open. That's it, right? There's no extended. Now, with certain indexes like QQQ and SPY, you get a little bit extra time at the end of the day, 15 minutes, to make adjustments or prepare yourself for the overnight. So you get a little extra time on some, but on a standard ticker like, Apple, for example, regular trading hours ends, you cannot make changes. You're locked in overnight. So there's some risk involved with the overnight portion of that. Now, if you guess right, or if you plan right, and your ticker goes the way that you want, no problem. But if you get caught overnight and there's a catalyst, something happens overseas, there's bad news, you're stuck until market open, and all you can do is watch as your ticker or your contract does as it's going to do. You got nothing to do until market opens again. With futures, you actually have 23 hours a day during, the normal week where you have access to get in and get out. 23 hours a day. Basically, it shuts down for an hour to get all of the contracts reconciled, and then it opens back up again. So with futures, you get the leverage, but you also have a lot of time, more than equities, more than options. Futures are open almost all the time, right? Not the weekends, not an hour where they have to get the books right. That's it. And then finally, what's the difference in account types? So for those of you, especially those of you trading with smaller accounts, hopefully you're familiar with the difference between a cash account and a margin account. I should maybe do another video about the difference between those two. We're not going to do that today. But if you know the difference between a cash account and a margin account, both are available for equities and options, right? you have the ability to get into and out of equities and options in either a cash account where you have the money that you have until it gets settled, or a margin account where you have a limit on the amount of trades you can make unless you're over $25,000. Those are the rules of cash and margin accounts. In a futures account, you only have margin. That is the only way you can trade, which means you can trade until your money is gone for the day, until it's settled for the day. The nice thing about, and I should have added this, I'm thinking about this now, but I'm not going back to edit the content. The difference is how quickly your cash settles. With equities, cash settles, I think it's one trade day plus one. With options, it is day of, and with futures, it is day of. So, if I were to try and summarize the difference between equities, options, and futures, options sort of presents the best of all worlds of equities and options. It is predictable leverage. It is it is unimpacted by the expiration. There's no theta, there's no Greeks, there's no math to figure out. It is available more hours of the day than either equities or options. The funding options, I forgot to talk about that a little bit. You can actually get funded for futures trading as well. And I'll talk a little bit more about that. I skipped over that one a little bit, but I'll come back to it. So, equities, you got to fund you. Options, you got to fund you. In futures, you can actually get people to pay you or give you money to trade in order to make money with futures. Now, there are many different prop firms out there. I think I have the ability to do a video on the one that I use. I'm not going to do that today, but I might do one in the future. But essentially with the prop firm, they'll give you a bucket of money to go trade with. They'll give you some parameters about what you can do with that money, but essentially you very much limit your downside risk. And if you're good at trading, you follow your rules, you have a good strategy, you do nothing but make money off of other people's money. So there's an upside there. And then at the end of the day, cash and margin available for equities and options. For futures, you can only have a margin account, but your funds settle immediately. So it's not that you have X amount of money to trade today, and then as soon as you get through to the top of your limit, you have to wait until tomorrow in order to start trading again, which is how it works with options and equities in a cash account. In futures, it is a margin account, and you can trade in the second you settle and you get out of a contract, that money's available to you again, and you can just go back in again. So you can trade as long as you have the money available. So in summary, futures kind of have the best of all the options available. This, regardless of whether you fund the trading yourself or whether you go get a prop firm to help you pay for your bucket of money that you're trading with. All right, so that is the class comparison. Let's talk a little bit about the actual tickers. I'll tell you which ones I trade. There are a bunch of futures. There are futures on wheat. There's futures on pork bellies. There's futures on anything you can think of, probably. Like anything you can think of is probably a little bit out of the normal. But like there are futures on common indexes. There are futures on resources. There are futures on Bitcoins. Ethereum, Bitcoin. There's a bunch of them out there. So anything where there are people willing to negotiate on what they think is happening tomorrow, there is a future contract or a future market available. So the most common ones that I play, ES, NQ, YM, and CL. Those are the four core tickers that I play in the futures market. So let's go through them really quick. Jeez, knocked the mic out of the way with my gesticulation. Sorry about that. So let's go through the four of those a little bit, and then we're going to actually jump over and do a little bit of virtual trading. I mean, I say virtual. We're going to use on demand in Thinkorswim. We're just going to pick a random day. We're going to go take a look at it, and we're going to trade some futures together. Sounds fun, right? So ES, which is essentially the S&P 500. So that would compare to or be the analog to SPX or SPY. So the price action is very similar. You can have them up side by side. They're going to go up and go down at the same time. There may be slight differences in the way that they count out or the way that the structures look, but day over day, they adjust at the end of the day to make sure that the classes look very similar between the index, the futures, and the ETFs that follow them. So that's ES, S&P. NQ otherwise relates to the NASDAQ, comparable to NDX or QQQ. Those are, I guess I don't play NDX or SPX really all that often because you can really only get options on those. They are just indexes. They just observe. You can't participate in them. But SPY, QQQ, those are ETFs that are very common among day traders. And NQ and ES, those are the two most common futures contracts that I trade, probably with the third probably being CL. We'll get to that one next. YM, I don't trade this one as often, but that is the correlation to the Dow Jones, the DJIA. So that compares to the IWM or DIA ETF. So those are kind of the big three. You can include the Russell, the RTY. If you're into kind of like the small cap market, it absolutely shows up, and there are definitely times where it is appropriate to go and look at that. And one of the things that I do, I'm sorry, I keep hitting the mic, guys. I hope that's not like blasting you in the ears. But one of the things that I do is I typically review what is the relationship or what is going on between each of those in a given session, right? So typically you'll see ES high, ES and NQ doing kind of the same thing. Sometimes when I see ES higher than NQ or the other way around, that, tells me a little bit about whether tech is leading or whether, standards are leading. If Dow Jones is leading, right, industrials and defensives tend to be a little bit more forward. So there's something to be said about the ratio between those different indexes or those different funds. So I tend to take a look at them and find out who's kind of outperforming or underperforming, because I'm happy to play short if that's what's happening. And then there's CL, which is Brent Sweet Crude, I think, the full phrase of the whole thing, but essentially oil. This is the other one I check on a regular basis, and the relationship between CL and the other tickers varies depending on what's going on in the market. Sometimes they are running opposite each other, sometimes they're running together. But what I found from playing futures is that oftentimes when ES and NQ are quiet, CL is willing to give me some action, right? What we're looking for as traders is some volatility. So I typically click through the 3 or 4 of them, looking just to find out who's got some volume, who's got some movement, who's getting close to structures that I'm interested in. So I hope that helps. Those are my 4. You may well find other interest in ETH. There are futures on gold, there's futures on silver, on copper, on wheat, all sorts of different stuff. So if you get into, most of my futures trading happens either in NinjaTrader or in Thinkorswim. You can look through the list of futures that they have there. I encourage you to look through and learn about all the ones that are available, and then look to see how they're comparing with each other, right? It doesn't really matter what it is. Like, look, if pork belly futures are flying, I'm willing to play them, right? The market behaves a little bit differently. There's something to be said for understanding the behavior of it. But like, look, tickers are tickers, and they're moving, and there are people or algorithms behind them. So there's opportunity anywhere that there's volume. If you get comfortable with how it works. So that, I think, is probably enough of me talking about the overview. Let's jump into Thinkorswim and take a look in the background here. I need to get over so I can look at this as well. We're going to look at ES. Right now, the calendar is set to March 17th. We're going to go back a bit. We're going to pick a random day. I don't want to know anything about the day itself. We're going to figure it out together. Let's go back to January. How about like January 25th? And let's do, I don't know, like maybe 4 in the morning. We'll start at 4 in the morning. That will give us a couple of market opens under our belt. We can kind of take a look at what's going on structurally. Let's start with the daily. We're going to bounce over here. All right, so what's going on here with the daily on ES on January 25th? Well, this is a 3-month, I think 3-month. Let me confirm that. Oh yeah, no, I'm sorry, 1 year. So this is a 1 year time frame of daily candles. We are sitting very close to the point of control on the volume profile indicator, which means that we're very close to the place where the majority of contracts have been exchanged, or equities have been exchanged over the course of the last year, right? So, which is interesting because we're on a downward trajectory, but regardless, the majority of volume has occurred in this area here. So we're getting very close to the point of control, which you can see over here on the volume profile. And that's all I know so far. If we zoom in a little bit and just kind of look at what's going on the daily here, we can see that some of our moving averages were all getting munged up together. We headed down, we bounced off of the 21. We had a green day, kind of a inside hammer here. And then it looks like we are breaking to the downside so far. And volume wise, we're below average. So I'm not really committed to any of these moves, but it does look like we had an inside day, which if you guys have seen any other videos, I love those things. And it does look like we have broken below that inside day so far in the pre-market. So that's what we know so far. Let's jump into our flexible grid here. We're going to look at the 4 hour, the 1 hour, the 15 minute, and the 5 minute. So on the 4 hour, you can see inside candle, outside candle with a strong down, breaking an important level here. On the 1 hour candle here, the 1 hour chart, same kind of story. We had a level here, we broke down through it, and you can see that we're very much in a downward trend heading into a pretty early morning. So there must have been some news, some crazy stuff that happened overseas. All right, that's all we know so far going on it. And what we're going to do is we're going to come over here and we're going to change our trading view to ES so that we can get in and out of contracts as we see fit when we trade our way through this day. So kind of looks like my bias right now, bearish. So on the way down, looks a little bit like a flag here on the 4 hour, right? This could still be flag formation. On the hourly, we got some big move, consolidation, big down move, down push. We got a level right here. We've pushed down past that level. There's that level again. So you can see that we bounced off of it several times and then eventually decided to give it up. We've come down here and we've now set a new pre-market low. And on the 5 minute here, look, man, it's just blood. Now, RSI is getting a little on the cold side on the 15 minute as well. We have not oversold on the 4 or the 1 hour yet. So, all right, well, I'm not taking any positions on this, especially not after a big move like this. So let's just kind of roll into it a little bit, see what goes from here. Yep, another big move down past the market low, and good Lord. Let's see here. I'm gonna kind of start to look for an overreaction level here at some point, and on demand is not moving quickly. I'll tell you what, let's do this. Get a little bit closer to market open. Yeah, it's still trying to render. Let's just say, oops, we'll say 8:35. Let's go 5 minutes after market open, after a pretty, what looks like bloody pre-market. Wait for this all to render. This is still building. There we go. All right. Oh man, you can see what happened here. So we had plenty more downside movement. We kind of got back to this level here on the 4 hour. So this is an important minute. We can see that there's a downtrend line here. So we might be looking for a reaction on this downtrend line. We can also see that we're coming up. So it looks sort of based on the bigger view here, it looks like we're kind of in the middle of, or in a breakout of a wedge pattern or a triangle pattern here. So we came up, we bounced off, we came down, we hit the lower end, came back up, we broke out, we came back down, and we're testing this lower end. So I guess I'm kind of flipping from maybe what looked like a pretty bearish sell-off to potentially a test of this trend line. So we're going to keep an eye on this trend line here. And we've got a wick down here with a lot of volume after the open. So that does kind of give me maybe some indication that we could see a reversal here. So I don't generally play the open. We're going to do this here just as an experiment because we're doing this together and I'm not necessarily trading live, but I'm going to go ahead and go long on this particular position because I'm looking at this 5 minutes in. We've got a strong wick with a bunch of buyers on the 15 and the 5 and a trend line here. So I'm just going to go ahead and go long on this particular move and let's play through it and see what happens. No, I didn't want to go low. I wanted to buy. Give me a buy. Hold on. Not that one. There we go. Oh, I didn't mean to buy 3, but I did. So we bought 3. We're definitely going long now. We're in it for we're really committed at this point. So we're going to wait and see here how the open treats us coming down into this trend line. Now, here's a big difference for me when I'm playing futures versus options. I am not concerned about what it means so volatility no longer changes the ratio of what's going to happen, right? So within options, higher volatility moments mean that the premium goes against me, right? Unless, of course, I'm in at a lower premium. So IV or implied volatility can work against you if you buy high and you sell low. Now with futures, not a concern, right? Futures is only concerned about price action. So it is a fixed ratio between the move of the ticker and the actual ratio between that ticker's point moves or handle moves and dollars. So in this particular instance, you can see that we're up from 40.21 up to 40.22. So let's just pause here and go see what that means financially. Now, oh shit, I went short. I clicked on the wrong side, y'all. I wanted to go long. I clicked on, I thought the ask side. I bought on the ask side, not the bid side. I don't trade futures all that frequently in Thinkorswim. I normally do these in NinjaTrader. So I made an oops, and you guys are here for it. So if you too are trading futures in Thinkorswim, if you're wanting to go long, go on the bid side, not the ask side. My bad. So, all right, it's going against me. You can see up here my profit and loss entry for 3 contracts. It's gone against me so far for $300. So I'm going to go ahead and just I'm going to put myself in here for, I will get myself out of here if we get up to 23. Oh, come on. 23.50. Really? All right. I just reversed my entire position. So we're down 300 for the day. And that was a user error. So I'm going to wait for this to come back down a little bit and then I'll re-enter maybe down around here somewhere. So I'll throw a couple down here. How about we just say that? So let's get back to it a little bit. We're still looking to go long, but you can see here that I was in at 3 contracts. It moved 2 points. And so in ES, and I should have maybe done a comparison between what the point movement in any of the given tickers or indexes actually means. In ES, 2 points or 2 handles is worth $100, right? Times however many contracts you're playing. So if you play 5 contracts and it moved 2 points, that's $500. Moves 4 points, that's $1,000. So it's just really simple math, and you never have to wonder about whether where do we go? Man, it's getting away from me. Oh, I did not get in, and it's running on me right now. That's fine. We're gonna kill these. We're gonna keep playing. Like I said, I normally don't play the open like this, but so we came down, we bounced off that trend line, and we are absolutely reacting to it so far. So we're just gonna let the remainder of the open play out here a little bit, and we'll come back down and get a better entry, or we won't. We'll find out. So I'm just going to sit here and let this thing roll for a little bit. Maybe drink a little wine. So the open is pretty violent. Now On Demand sometimes does not update the ticker in the same way that the actual price action moves. So I'm going to go ahead and I'm going to jump in here. We'll take 1. All right, so we're going to go in at 40.25, which was significantly higher than my previous my previous entry. We're going to wait for this maybe to come back down again. And where do we go? Do we drop? Yep, we drop down a little bit. We're going to average down. Dang it. No, we're not going to average down yet. We're going to wait for that price to drop a little bit. So I don't love this entry. But you can see that we went from a red candle with a ton of volume to a green candle, a hammer, frankly, right, with a lot of buying strength behind it. There's a lot. Look at all those all that buying pressure. Now, granted, we're just 3-4 minutes. No, I'm sorry, about 17 minutes into the open. So there's still a lot of volatility, but it's starting to settle in a little bit at this point. So, you know, typically by like 10 minutes, 15 minutes into the open, the overnight orders, the buy to opens, those are all starting to settle out a little bit. So we'll have a better sense of what the actual movement for the day is. And we still get our opening breakout range move trader moves that we can react to. So we're kind of hanging back. We're going a little bit red. I'm going to average down just a tiny bit. Button for that. All right. So, now we're in at 3 contracts. I'm going to heal that one. All right. So we're long 3 contracts at this point on ES. I'm still apparently expecting a move up. I would have felt better about picking up on that wick down below, but whatever. We're just trying to learn a thing here. So what I'm looking at and kind of mentally the math that I'm doing. So here's kind of one of the big advantages of futures, right? I do not have to try and figure out what's going on with theta. I don't have to figure out what's going on with any of the Greeks, right? It is very straightforward, simple math. I am looking at my current entry price, right now, 40.23, right? So that's where I'm in with 3 contracts. So anything that I derive after this is multiplied by 3. Oh no, we're dropping off here. I'm gonna shrink this down just a little bit so I can keep a better eye on it. So I'm gonna pause here and we're gonna talk through the math that's going through my head right now. So we're in at 40.1825. I'm sorry, that's the current price. We're in at 40.23. Okay, so as I mentioned before, ES is $100 for every 2 points. Now that number changes on NQ, for example, my other common ticker for NASDAQ. It is $100 for 5 points, right? So ES is 2 points for $100. NQ is 5 points for $100. So just bear that in mind. Now, that is multiplied, of course, by the number of contracts that you have. And all we have to do in order to figure out, are we down or are we up? And granted, this guy up here is telling me exactly where I'm at. I'm down $725 so far. Why? Because if I go ahead and count up every 2 points here from here, 40.23, 40.21, down here, 40.19, right? We're a couple $100 down, and we have 3 contracts. So 725. That's where we're at right now. So we are dropping right now. I'm looking at the balance here of buyers and sellers, right? The sellers have definitely showed up and they are representing themselves and trying to figure out whether they are going to be able to push through the downside of this trend line. So I, as a trader, don't have to worry about does this have to happen before the end of the day? I don't care. This can go out. I can play this for a couple of weeks, a month if I have to. Not that big of a deal. Unless, of course, it just continues to go against me, right? So I am not worried like I am in options, especially if I'm playing a short days to expiration, that this has to happen soon, or theta is going to eat my lunch, or, I'm just going to run out of time. Those are my options. Here, I can just continue to watch the price action and decide if it's going against me. So right now, through my mind, if I were doing this in real time, here's what I'd be looking at. On the 4-hour chart, there is clearly a level here where the price bounced and came up, a strong sense of buyers here going through 2 levels, right? So you can see this on the 4-hour chart. Right here, we had a strong presence of buyers and we have tapered off a bit here and we're back down testing this level again. So there's that little wick right there. This is the wick that I'm interested in on top of this trend line. On the 4-hour, you can see that the point of control is above us on the 1 hour. We're down here again, testing this trend line, and we're just coming into our opening volume. So I need to figure out whether we're going to hold this trend line or whether we're going to lose this trend line, because if we lose this trend line, I'm going to lose a lot of money with 3 contracts. All right, on the 15-minute, we have red candle, red candle, red candle, red candle. So I have a bearish bias. I am looking it down. I'm trying to play the reversal. I'm hoping for more buyers to show up here on the open, but I should probably start thinking about at what point is my thesis invalidated. If I come back up here to the 4 hour and I look around here at this outside candle and the wick here that held with the buyers, this thesis gets invalidated around 39.80. So that is quite a ways down here. I don't know that I want to wait until 39.80 with 3 contracts. I mean, look, if you're doing well, maybe $700 is not a concern for you. Like, I have things I could do with $700. So I don't know that I want to wait until 39.80, but that is probably my breakneck where I know that this has blown up completely. Now let's go take another look here at where we're at on the trend line. The trend line, 39.84. So we're starting to develop an idea here that that is probably where we would need to get out, because that would tell us that this is not going to bounce. It's going the other direction. So let's just go down here. We got to go way down. Actually, we're gonna zoom out a little bit here and go down to 39.80, and we're gonna put our stop losses in here just to make sure that we don't lose our shorts. All right, there's our 3 contracts, and we're not adding anymore. We're not averaging down. Either this thing plays and it goes up, or this thing drops and we're gonna feel some pain. So let's find out what happens. All right, back to the fast forward. I'm gonna have a little bit more wine while we watch the show continue. All right, let's see here. Buyers and sellers, you can look here at the buy sell pressure. By the way, guys, if you like this indicator here, where you can see how many buyers versus how many sellers are showing up in a given volume candle, this indicator is available for free on my website. I didn't make it. I grabbed it. I customized it a little bit. I'm colorblind. I needed the colors to be a little bit differently. I needed to show up a little bit different. So I can see so far in this 5-minute candle and the 15-minute candle, we're pretty evenly split, but the sellers seem to be winning so far. Now, I got to be honest, part of me is considering averaging down a little bit more. Now, I shouldn't have to explain whether this is a good idea or not, right? It might be. If my conviction's super high, we're definitely going up. I don't see any way that we don't go up from here. Averaging down, you know, if your conviction is really high, is an option here. But you can see we're pretty down. We're down $1,500 so far, right? Like, we're hurting a little bit here on our contract. And frankly, you know, if this goes below 410, I'm going to start to get a little bit uncomfortable about whether we're going to be able to recover from this. So we're waiting to see. You can still see that we've got, you know, relatively evenly split buyer and seller pressure. You can see we're down to the 410 level, and I am, if this were my own money, if this were not virtual cash, I'm probably starting to get a little uncomfortable about whether I picked a winning trade or not, and I did not mean to go in 3 deep. Had I just gotten in at 1 contract, I might consider averaging down a little bit just to bring down my price and give myself a better chance at getting an exit here. But as you can see, we're down to 405 at this point. So I'm going to do something I would not normally do in real life. I am going to average down at this point. I would not generally average down at 3 contracts, but look, I didn't mean to be in at 3 contracts, and it was kind of a mess. So I'm going to grab 2 more here. I'm going to put us in at 5, bring our average down a little bit. Gosh, not as much as I'd like, to 416. All right. Now, if we get below 4,000 at this point, I mean, we know that a little bit further than that, there's our stop losses. And honestly, I really feel like I'm going to bring these up. I'm going to spider these up a little bit. I mean, I know it's just virtual money, but I don't love losing it. All right, so we're kind of holding at 405 so far. You can see that our candles, the buyers are still stepping up. We still have our wick here indicating that there's demand and maybe other people looking at this trend line. I don't know if I want to wait through this to play the entire time. We're going to fast forward, guys. And like, look, if this tanks on us and goes below and I don't get out in time, it's okay. We'll just agree that we saw how the whole thing worked. If it bounces back up, good for me. Let's see what happens. All right, so we jumped forward 10 minutes. Let's see how that panned out. Oh man. Oh, hey, look at that. All right, we bounced up. Hey, we're green, y'all. See, it's fine. That's a terrible attitude. All right, I would have been sweating my pants off on this thing. But look, walking away for 10 minutes and coming back because I felt like I had a thesis, right? I explained what I was looking at. I explained what I was looking for. And I told you what it was, and I got to be honest, guys, my biggest enemy is my own emotional response when I see things red. And I told you, it's not real comfortable with what I saw there. So, okay, we had a strong bounce off of that line, it would appear. Now, 415, hold on. We're in at 416. This is saying 415. That should still be red, so something's not quite right yet. Hold on a minute. Okay, so there's our bounce back up. Oh man, we dumped. So the hourly came down hard. There was a big volume candle down. So that was our opening volume candle. That is normal. There must have been news that happened on this day. I don't know what happened. So we came in, we bounced, we came back up, we hit down hard. We closed at 39.70. Guys, that would have closed me out. That should have closed me out. If I was just playing this in real time, I set my stops at 39.80 and we clearly broke it. So the fact that we're green right now, it's not real, right? I'm out of this trade. I was wrong. But we're playing it virtually. We came down, we hit 39.70 hard and we came back up and we're green on the trade because we averaged down. And I don't know. I mean, it's virtual. I'm going to hit the button one more time. We're going to go 10 minutes forward in the future. Either we're out of this thing big green or it dumps back down and we're big red. We'll just wait for it to settle out. It's going to go red here. All right, now we're down $1,200. So if I were super confident on this, and I'm not, I would say, well, we're down, 4 hours down, hours down. We have lost. That is a strong break with lots of volume and tons of sellers coming down. There's a stem pointing downward. I am not feeling good about our ability to recover from this. So I would say that this is a blown thesis. It's not the point here. We're not here to, to judge whether my thesis was good or not. I told you what it was. But here's the important point. I don't care about how long I have until the end of closing hours. Right, I can sit on top of these contracts. If I feel, and we can go back out to the daily chart here at this point, if I feel strongly that what this chart is telling me is that we have green days ahead of us, I can just sit on these contracts. I'm not going to get chased out. I'm not going to get my contracts closed. And honestly, if I'm looking at this, what's going on here? We had a lower trend line. We came down. We caught, I'm not going to say that the moving average caught us, but we pulled back a bit. We headed back up. We had a hammer. We broke to the downside. I told you that my thesis was bearish on the way in. So I'm realizing now that I tried to play to the upside here, but the thesis was bearish coming in. We had an inside day with a break below, and that break below is continuing on its way down and continuing to test. This is actually, I think, the 200. So if I feel like this thesis is still good to the upside, and I might, because look, we have a higher low, a lower high, a higher low, a higher high, and we're not sure where this one's going to go yet, right? So if this keeps going and we get a lower low, clearly it's over. If we bounce back out of this, we would be actually due for a lower, higher low, a higher high. A higher low here might telegraph that we have a higher high coming and validate the bullish thesis. I'm not feeling particularly bullish, but let's just for fun find out what happens if we go to the next day at this exact time and find out whether I completely lost the house or whether it was, a part of a bigger trend. So let's jump back into the flexible grid and we're going to find out how badly my play panned out. You can see that we really crashed through this trend line. And look at that, we bounced right off of it and we crushed on the way out of it. And we made $17,000. I don't know. I would not have done this with my own money, but that is the power of options. The leverage is phenomenal, and the lack of concern about time is really one of my favorite things. I also like that I don't have to just sit and watch helplessly when ERs get dropped and news occurs overseas, right? I have the ability to manage my positions 23 hours a day during the trading week, and I never have to really do any complicated math, right? It's easy. $2 per handle, $100 in ES. $5 5 handles in NQ is $100 in NQ. And in CL, I don't actually know I don't have a YM as a ratio at the top of my head, but in CL, it's $1,000 per full point, but essentially, $10 per tick in CL. So they are all capable of being very lucrative, and they can unload your worry about timing. So, all right, guys, I feel like I've been blathering on for long enough. I'm just repeating points and it's not helping anybody, and I'm out of wine. So there's no point in continuing. That's all I got for you on the intro to options. If you guys have questions about it, if you want me to study harder and do better, let me know down below in the options, and I'll get you more information. Until I see you guys next time, take care of yourselves. Cheers.
Your paper's clean, do what you feel.